market movers. This is The Pulse.
Good morning, everybody. Welcome to The Pulse. I'm Anna Edwards, in for Francine Lacroix this morning. Now, Bloomberg has learned that the US and Iran are looking to arrange a second round of peace talks in the coming days, with one proposal to return to Pakistan. In a Fox Business interview, President Trump reiterated he sees the war nearing its end.
I think it's close to over, yeah. I mean, I view it as very close to over. You know what? If I pulled up stakes right now, it would take them 20 years to rebuild that country. And we're not finished. We'll see what happens. I think they want to make a deal very badly.
Meanwhile, in Washington, Israel and Lebanon began negotiations to halt a war with Hezbollah. Secretary of State Marco Rubio hoping the talks would set them on the path towards lasting security.
All of the complexities of this matter are not going to be resolved in the next 6 hours, but we can begin to move forward to create the framework where something can happen, something very positive, something very permanent, so that the people of Lebanon can have the kind of future they deserve, and so that the people of Israel can live without fear of being struck by rocket attacks.
Let's bring into the conversation Bloomberg Horizons anchor Jumana Basechi, who is, of course, in Dubai for us. Jumana, so another day where we're talking about talks and looking ahead with expectation and hope that there will be another round of these peace talks before the ceasefire expires. How optimistic should we be?
Yeah, that's right. And President Trump himself is talking up the prospect of those talks occurring at some point. And he said in the next couple of days, in multiple interviews that he's given to journalists and phone calls over the last 24 hours, he also told ABC that something amazing, quote unquote, could happen in the next 2 days. And in that little bit of the interview from Fox Business, he also suggested that the war is ready to be wound down, or beginning the process, the wind down process of the war. So hinting that perhaps the U.S. are very keen to move forward with the second round of negotiations. Now, I will just say that there has been a lot of speculation as to where and who would host these talks. Islamabad would have been the obvious choice, though we've just got notice now from the Pakistani Foreign Ministry saying that the Prime Minister, alongside the Foreign Minister, will be making a 3-day trip around the region the next couple of days, from April 15th to April 18th. They'll be touring Qatar, Turkey, and Saudi Arabia. So if indeed Islamabad is planning on hosting the next round of discussions, unlikely that it's going to happen before April the 18th. That's the new information that we have. But of course, other countries have put their hands up and said that they're ready to mediate as well, including the likes of Switzerland, which in the past has held multiple rounds of discussions. Now, the important thing here that I need to mention is we have not yet heard from the Iranian side, Anna. They've been very quiet, very low-key. The latest we've heard is from the president, Pezeshkian, yesterday, saying that they would be inclined to continue with negotiations so long as they are conducted under the quote-unquote international framework of law. So read that as you will. And some people are saying that perhaps because they're being less hostile than usual, at least on social media, and some of the messaging that's coming through could be construed to be constructive and laying the foundation for that next round of talks.
And Jumana, we began this week with two overlapping blockades, it seemed, in the Strait of Hormuz, one by the Iranians and one by the Americans. What is the latest on how the U.S. naval blockade is playing out? We've seen reports, that from the Iranians that they say that one Iranian-backed ship has actually made it into the Gulf. We're seeing other reports that a ship bound for Iraq has made it in, and that maybe is less surprising. What are we hearing then as to how open or otherwise the strait is?
Yeah. All of us are moonlighting as sort of shipping tracking experts now, but it is a valid point. And let me just say that CENTCOM put out an update this morning saying that their blockade so far has been successful, and this was about 36 hours since it came into effect. They say that 6 merchant vessels had to turn away on back of their instructions, but there has been minimal activity overnight. And remember, yesterday we were tracking the movements of this vessel, the ship, the Rich Story, which made it through the Strait of Hormuz. But it appears to be the case now that it stopped and turned off its signaling. Unclear really where its final destination is. And Iranian state media just a couple of hours ago are suggesting that one of their own ships is defying the blockade and attempting to make their way through the Strait of Hormuz. From our own analysis, we believe that this is a vessel called the Alicia. that is sailing very close to the Rich Starry vessel that I just mentioned now. So we're going to keep an eye on that and to see whether or not it actually does make it through the Strait. And then reportedly, unrelated to Iran, but there is an Iraqi vessel making the way westward coming through. So this would be the first of westward type movement that we see in a couple of days that is heading towards Iraq to load up. And they've said that their final destination is Vietnam. So there is a little bit of activity, I would say. But, ultimately, we are very, very far away from the level of activity that we saw before the war started, when 100 to 120 ships would pass through a day. Now we're micromanaging and watching 1 to 2 vessels to see really how effective this blockade actually is.
Yeah, and many of them seem to be hugging, as requested by Iran, to the Iranian side to avoid what might be mined waters. Still a lack of clarity on that around Oman. Thank you very much, Jumana. Bloomberg Horizons anchor Jumana Basechi. On to matters central banking, and the ECB President Christine Lagarde says reaching a settlement to the war is in the best interest of the global economy. In an exclusive interview with Bloomberg, Christine Lagarde also discussed how the prolonged conflict has weighed on her outlook for growth and inflation.
I have seen successful program being completely wiped out by war. So war is, in any circumstances, the worst outcome. If you talk in strict economic terms and the movement of goods and all that, it's the Strait of Hormuz not being open for shipping and transportation, because you have 20% of gas and oil going through that, as well as the like of ingredients necessary for fertilizers, ingredients necessary for microchips, and what have you, not going through the strait.
So what's the pain threshold for the euro area economy that the ECB would have to act on? Is it inflation at 3-4%, or is it?
Look, we have forecasts for inflation that vary between 2.6, which is the baseline that we have, and a little north of 4%. Based on what I told you earlier, which is see-through, strong, decisive reaction, or somewhere in between, depending on the factors that we see, we will adjust, because we will be agile. But one thing for sure is that we will keep our 2%.
Madame Lagarde, how worried are you about the discrepancy between spot and future oil prices, and so potentially tighter markets that we're pricing in?
I think it's the whole dilemma that we have about short-term and medium-term. And the more anxious and worried economic actors are about the resolution of this crisis, the more pressure there will be on the spot market.
How much do you blame the U.S. administration for what's happening to the European economy?
It's not my job to do, blame, to point finger or to associate this or that with blame. I'm more in the hope section myself, and I very much hope that people can sit at the table, can come to their sense, and understand that it will be in the best interest of the global economy, of the people, that a war settlement is reached, and that not just a ceasefire, and that we can navigate through the straits of the world.
That was the ECB President Christine Lagarde, of course, speaking exclusively with Bloomberg's Francine Lacroix in Washington. Now, European markets are broadly flat this morning as earnings have been rolling in. Geopolitics remains in focus as the US and Iran aim to hold more discussions. Let's bring in a voice from the markets. Then Laurent Ramsey, who's managing partner at the Pictet Group and chairman of Pictet Asset Management. And very nice it is to see you this morning, Laurent. Thank you for joining us. I wonder then, when you talk to clients and you engage with them in conversation about markets, how much is everything still about war in the Middle East, or is there space for other investment narratives to be expressed?
I think we see our job as managing long-term savings on behalf of our clients, whether it is for a pension plan or for a high net worth. So our job at the moment is to try to look far, to look ahead, to try to weather the storm. Rather than try to anticipate what markets are going to do tomorrow. I think these markets are extremely difficult to trade day in, day out. So you don't know what's the next news is going to be, what the next surprise is going to be. So we try to talk to them about and remind them about what their objectives are, and try to stick to those. Yes. So at the moment we're sitting tight, we've cut risks. We went more defensive, and we'll weather that storm like we've weathered storms in the past.
Yes, and we see markets then trying to move past the Iran narrative, trying to put this behind us, even though the Strait of Hormuz is largely still blocked. You've reduced risk. Is it now time to put that risk back on, or is it too early for that conversation?
I think it's too early. I think the volatility and uncertainty which is in the market is bound to make you make wrong decisions. So again, we're sitting it out for the moment.
Sitting it out. I mean, we've seen a lot of markets around the world actually reclaim the highs they were at before the war started. So that's the case with some of the Asian markets, in Taiwan, Singapore, and China. It's also the case with the S&P. It's not the case in Europe. So how much do you lean into Europe or away from Europe at this point?
But at the moment, we're neutral equities. We're neutral regionally speaking as well. We're slightly overweight in healthcare, in utilities. We like tech, so we don't have any marked, regional bets at the moment.
I wonder what you think's at stake for the global economy then. We were listening to the Citadel founder and CEO Ken Griffin, who was speaking at the Semaphore World Economy 2026 Summit. He's been giving his view on what this means for the global economy. Let's listen.
We have a classic energy price shock unfolding across the world as we speak. That, of course, will create demand destruction. It will cause economies across the world to decelerate. The risk of a recession has increased. And central banks are making some really difficult decisions. This really is a very, very treacherous moment for the world economy.
So Ken Griffin there saying this is a treacherous moment then for the world economy. And I wonder if we've seen the full extent of that, Laurent, or whether that is still to come. Because it seems tempting looking at markets trying to move on to conclude, oh, well, the worst didn't happen. But maybe, aside from the humanitarian story, of course, I'm thinking for markets. But maybe the tightness or supply constraints or shortages for Europe, particularly, maybe they're still ahead of us. Where are we through this story, do you think?
Yeah, we think that the risk is more on the growth side than it is on the inflationary side. And the longer the Strait of Hormuz stays closed, the more this risk, increases. If you consider there are 4.2 billion barrels of reserves, and that 25% of those reserves are accessible, and that we lack 12 million barrels a day, more or less, out of 20. 8 can be redirected through the East-West pipeline and other means. That gives us until the end of May before we really have a severe shortage. So I think the faster we can resolve the crisis, the faster we can reopen the strait, the better. But there's definitely a risk of recession looming ahead. There is a risk of recession then.
That's not your base case though, I assume?
So our base case, we give it a 40% probability that will be there.
So if the big risk is growth, not inflation, does that mean the bond markets are front and centre? Is that an important part of portfolios at this point?
It is. Again, as I said, at the moment we are neutral on bonds. We've cut our exposure to credits. We're neutral on treasuries. So yeah.
Yeah. What about when you talk to wealthy clients and thinking about wealth management for those in the Middle East? I mean, has there been a lot of... Is it your experience that money in the Middle East has been trying to find homes elsewhere, or what's the story there?
Yeah, I think it's a good question. I think in general, wealth is mobile. And we've moved from a world where clients were trying to diversify their investments to now a world where they're also trying to diversify their booking centers. So our job is to provide optionality to those clients, and obviously Switzerland is an interesting hub because we are in the business of trust, and trust is a function of a few things: expertise, for one; second, intimacy, and how well you understand your clients' needs. And I think the long tradition of Switzerland in wealth management, in dealing with successions, in dealing with family governance. Provides that level of discussion that we can have with ultra high net worth clients. And last but not least, trust is about reliability. And therefore, you want a home to custody your assets where you have a stable government, a strong currency, a strong regulatory framework. And that's what Switzerland can provide.
If Laurent, there had been a temptation for some wealth management business to gravitate toward the Middle East before this happened, do you think some of that comes back to Europe now?
It might. It might come back to Europe. It might go to Asia. But we're going to see wealth being mobile again. And
I mean, in an increasingly fragmented world, is there also, I mean, yes, wealth is mobile, but it's also aware, I suppose, of the dangers of putting money in places where it might become out of reach at any point. Is that something, because we talk to businesses about supply chain resilience, I wonder if those with wealth are thinking about the resilience of the supply chain of that money, being able to keep getting their hands on it.
Yeah, exactly. And this is exactly my point about diversifying your booking centers. You don't want to put all your eggs in the same basket. So we see a lot of clients, wherever they are serviced, trying to book their assets in different places.
And different currencies, I suppose, it flows from that. De-dollarization was a theme we talked about a lot in January, February. Yeah. That really went away when we saw that the dollar, it is still a haven in the month of March. But where do we stand on that conversation?
Long term, we might see a bit of de-dollarization coming back in. We think that, if you're sitting outside of the US and you believe that structurally the dollar is going to be eventually weaker, for different sets of reasons, then you might want to diversify away from the US. The imbalance between foreign investors in the US and US investors investing abroad is around $26 trillion. So you just need a little bit of rebalancing for that to have an impact on the markets. And when we talk to our clients who have been for a long time now overweight US assets, and rightly so, they're starting to consider rebalancing out of the US towards emerging markets, towards Europe. Obviously, the recent crisis have put that a bit on hold, but they're still considering it, whether we're talking about public markets or whether we're talking about private markets.
OK. Laurent, thank you very much. Thank you for joining us. Laurent Ramsey, a managing partner at Pictet Group and chairman of Pictet Asset Management. Coming up on the programme, the US and Iran explore the prospect of further talks as Israel and Lebanon meet at the negotiating table. We'll be hearing from RUSI Senior Research Fellow on this subject. That's coming up next. This is Bloomberg.
I think Iran has learned through this war that while the nuclear card that they had, that was their leverage against the world, right? If you don't do what I say, I may be crazy enough to go to nuclear weapons, right? That was always the threat. When I was in the White House and I was in the State Department, I think they realized that costs billions of dollars. One $20,000 drone hits one tanker and we control the whole straits. So I think this is a card they don't want to give up. They're going to control it, even if they open the straits.
That was the TWG Global Managing Partner, Amos Hochstein, speaking to Bloomberg at the HSBC Global Investment Summit in Hong Kong, reflecting on his backstory in US politics, of course. Let's get more on the situation in the Middle East. The US and Iran are looking to arrange a second round of peace talks before the ceasefire deadline expires next week. This as Israel and Lebanon hold their first direct negotiations in more than 3 decades. Joining us now is Burcu Ozcelik, who is a RUSI Senior Research Fellow for Middle East security. Burcu, thank you very much for coming to talk to us. What prospect then for a deal? We did not see success at the peace talks that took place over the weekend. The ceasefire has still held, but it's rapidly coming to an end. So what kind of optimism do you have about the ability of the US and Iran to find a peace agreement over the next few days?
Well, I think the clock is running out and there's a great amount of pressure on both sides to arrive at some type of agreement, whether that is one that we can call a durable peace settlement. I think that would be rather far-fetched. What's more likely is a conditional or phased approach that might emerge over the next few days during talks that take place in Islamabad or another venue. I think there is also some speculation about where the talks might take place. But overall, it is positive that diplomacy has been ongoing. There's been great momentum by regional actors in the Middle East. We had the Quad previously meet in Islamabad and elsewhere and discuss the possibilities of what a diplomatic pathway might look like. That, of course, is Saudi Arabia, Egypt, and Turkey and Pakistan. So there is still a door that's been left open. We do not yet know how Tehran might respond to the offer that J.D. Vance said they left on the table. But there are still points of great disagreement between both sides, as well as points that now appear to be bridgeable.
OK. And yes, one of the areas of disagreement that's been much cited by the Americans has been around the development of nuclear weapons. That seems to be the focus for the US president, Burcu. Do we see common ground there? Because sometimes we hear talk about weapons themselves, other times about Iranian enrichment and what's going to be allowed. I mean, is there going to be any kind of agreement on that front?
Well, it's difficult to say. It's largely because President Trump's the goalposts have moved repeatedly since the start of the operation on the 28th of February. But the main sticking point now appears to be the issue of suspension of Iran's nuclear enrichment program. It's been reported that J.D. Vance, the negotiating team, suggested a period of 20 years, whereas the Iranian negotiating team was able to offer a timeline in single digits. That could be up to 9 years. Again, these are still issues that are being floated publicly. We don't know precisely what the posturing positions have been behind closed doors. The other issue, of course, in addition to the nuclear program, is what happens next with the Strait of Hormuz. The one issue that is, I think, fundamental but may be left out of negotiations, as far as we know through open source reporting, is what Iran might be willing to concede on its ballistic missile program, as well as its support for armed groups or proxies across the region. And bearing in mind, these latter points are those that matter significantly for Gulf states as well.
Yes, and thinking about the proxies, could this whole thing be thrown off course by the conversations between Israel and Lebanon? Those are ongoing, but on a slightly separate track.
Again, I think overall it's positive that the government in Lebanon and Israel are in direct negotiations. This is a landmark moment. It hasn't, direct talks haven't happened in decades, so it's significant. I think from a strategic diplomatic point of view, it's also the United States and Israel trying to extract that card, that leverage from the Iranian government, the card that they have, the influence that they have over Hezbollah, and engage in direct interaction with the Lebanese government to work on a pathway of disarming Hezbollah, potential normalization in the future. But we're very far from the possibility of that reality where things are now, with Israel's ongoing military operation south of the Litani River, which has been hugely destructive. But there are simultaneous tracks being pursued at the moment. We're seeing what typical of President Trump's practice. I think the military option, the blockade of Iranian ports in the Strait of Hormuz, alongside diplomatic pathways or attempts, Israel, Lebanon, as well as potentially the next round of talks in Pakistan.
OK, Burcu, thank you very much. Thanks for joining us. Burcu Ozcelik, RUSI Senior Research Fellow for Middle East Security. Really good to get your perspective on the developing situation. Still ongoing, of course, in the Middle East, even as markets try to look to other areas. Coming up then, we'll talk about bank earnings. JP Morgan and Citi post record revenue numbers, while Wells Fargo misses. We had quite divergent share price reactions to the US bank earnings season so far. We'll hear from another couple of banks in today's session over in the United States. So perhaps that part of the earnings story serving its purpose, allowing the markets maybe to move forward a little bit with a focus on what's happening to the American consumer, private credit, deals within the US banking space. All of that coming up shortly. We'll dig into the US banking results on this programme. This is Bloomberg. Welcome back. Good morning. This is The Pulse. I'm Anna Edwards, live in London, and these are your top stories. European stocks and US futures tread water as investors downplay tensions in the Strait of Hormuz, turning their focus to a potential second round of US-Iran talks. Hermès plunges the most on record after disappointing first-quarter sales, while Kering slides on weaker-than-expected Gucci performance. And ASML lifts its full-year sales outlook as booming AI demand drives orders at Europe's most valuable company. Let's just get to some breaking news coming through in the shape of UBS over in Switzerland. Just getting some news lines coming through from UBS this morning, and it seems quite a few of those. So Sergio Ermotti over at UBS saying they're finalising the Credit Suisse integration. Swiss capital reform, the UBS chairman then also saying that Swiss capital reforms would weaken the bank, and this has been a point of contention between regulators and the bank for some time. The UBS CEO Sergio Ermotti then giving us a few others lines saying that Credit Suisse deal wasn't a bargain. So interesting narrative there around the price and the consolidation costs there perhaps. And the chairman also giving us some other lines. Basically all of this coming through in AGM speeches, I think. That seems to be the gist of it. The UBS chair saying that the CEO is to lead the bank through regulatory uncertainty. And a bit more detail on their thoughts about reforms. Sergio will see the integration through to completion and then focus on driving growth and sustainability of higher returns. So some lines from both of those in line with, well, on the subject of consolidation within that sector. Let's stick with the banking sector. The CEO of Commerzbank says she's had some talks with UniCredit about a deal after the Italian bank announced a takeover bid for the German lender. But Bettina Orlopp says the companies are still at odds over the valuation. UniCredit made a €35 billion offer last month. Orlopp has since said that she is sticking with her standalone strategy.
We have constructive dialogues, at least from our perspective, since the beginning of the journey, so since September 2024. Because UniCredit is an investor, an important investor, now the largest investor also, and we take that into account. So we had every quarter, we had bilaterals between the two institutions where we actually answered all questions UniCredit had, and we did not take up any feedback when it comes to our own strategy or to potential collaboration or something like that. And we always stated that we would be open for a dialogue when we see potential terms, potential ideas of a business combination agreement. And what happened after the announcement of the takeover offer is that we had some talks, some interactions about a potential business combination agreement, but for the time being, it's very clear that our opinions differ quite a lot, starting with the valuation of the two companies and to the banks and the exchange ratio. And there are also some disagreement, I would say, about the potential future business model.
That was Bettina Orlopp, the CEO of Commerzbank. So views not aligned between the management of Commerzbank and UniCredit about the value of that German business. Let's pivot to the US banking story. US banks have reported at least $100 billion of private credit exposure as they revealed some record revenue numbers. Traders at JP Morgan Chase posted their highest ever quarterly revenue in the first 3 months of the year with record stock trading results. Chairman and CEO Jamie Dimon was cautious, though, about what lies ahead.
There will be a credit cycle one day, and I think when there's a credit cycle, losses will be worse than people expect relative to the scenario. I don't think it's systemic. It almost can't be systemic at that size relative to anything else. But, you know, when recessions happen and values go down and people refi higher rates, there'll be stress and strain in the system.
Bloomberg's Tom Metcalf joins us now, leading finance coverage here in Europe, but lending his ear to what's going on stateside right now. Tom, good morning to you. So let's start with JP Morgan. We just heard there from Jamie Dimon, slightly different complexion maybe to the commentary coming out, but in terms of the numbers, some great trading results. What else stands out to you?
Yeah, it's interesting. Great numbers, and then you've got Jamie Dimon coming out and actually, in many ways, pushing the stock down with a pretty bearish kind of outlook. Which, you know, to be fair to him, he's definitely one of the more sort of bears out there, the bigger bears. So I think people are taking that guidance kind of into account. But when you look at the kind of what the traders did, across the board at JP Morgan, they just did a really strong quarter, and it really puts Goldman's results the day before in a different complexion where their bond traders basically missed estimates. JP Morgan came through very strongly.
And a pretty strong story coming out from Citi then.
Yeah.
There's been a long-running turnaround story taking place over at Citi, and some of the fruits of that coming to the fore, it would appear.
Yeah, they arguably came out yesterday best. Their shares were up a couple of percent. And yeah, it does look like that long sort of push under Fraser is starting to bear fruit. And again, broadly speaking, very strong in the markets. All the banks benefiting from the volatility there. But you're seeing, you know, that kind of cost control taking shape. So it does feel like Citigroup, as they were saying yesterday, is kind of coming out of the restructuring mode and then now starting to look more at opportunities and growth, which is obviously a great news for their stock.
Wells Fargo, on the other hand, not such a great day for them. Their share price stands out for the wrong reasons, I suppose. But is it just as simple as the numbers just missed?
Yeah, I think so. I mean, I think very disappointing when you look at that. I mean, obviously it's a difficult macro backdrop, but a lot of their peers sort of managed to come through that and at least hit those targets. But yeah, Wells Fargo shares down 5-6%, I think, by the end. So a real spectrum over these Q1 results. And then today, of course, we've got Bank of America and Morgan Stanley.
Yes, and so what's the focus going to be there? Because I don't know if we've... I mean, strong trading revenue has been something of a theme already. Whether the markets have rewarded it, and it hasn't been across the board, actually. There's been some, I think, Goldman FIC team that was punished a bit by the markets, wasn't it? The underperformance or the not meeting estimates there. But elsewhere, the trading story has been quite strong because there's been such volatility in markets. So as we look ahead to the corporates that are going to report today, what are we expecting to be the themes?
Yeah, look, I think equities for me. I'll look at Morgan Stanley and see how that team there done. A long time they were top of the street. Right now, Goldman is sort of expected to hold number one for this quarter. And yeah, you're absolutely right. At Goldman, the sort of fixed side disappointed, but the equities blew past like this massive expectation. So it'll be interesting to see if Morgan Stanley can kind of do the same, or is Goldman's performance sort of, you know, taking share from Morgan Stanley. But that'll be the big thing for me on that bank. And then Bank of America, you know, a bit of a, you know, much more of a universal bank. I'll be particularly interested what the guidance is coming out of the CEO in terms of, are they seeing distress in any of the American consumer? For quarter after quarter, the message has been things seem pretty rosy no matter what is happening in the wider world.
Tom, I was just blundering through, breaking some headlines coming through from UBS moments ago. I mean, this has been an ongoing standoff, hasn't it, between the government and the management at UBS, because the management doesn't like the regulatory push that is coming from the government. Kelleher over there saying, this is the chairman of UBS, saying they have a fiduciary duty to lobby against the reforms. So I guess the standoff continues.
Yeah, the sort of lines of the sand are drawn. I mean, we're expecting kind of the final shape of at least what the Swiss government wants to do in the coming weeks. And yeah, for me, I think those headlines are really interesting. Probably the biggest shift there on the UBS side was Kelleher saying he expects Ermotti, and this can be widely interpreted, to stay through the regulatory uncertainty. So we knew for sure Ermotti was staying through for the integration, which is expected to finish sort of this year, maybe early next. But, you know, it's a bit of an open question for me, at least. What does, you know, when does regulatory uncertainty end? You know, this Swiss capital reform is many years. Yeah, so maybe Ermotti is going to stay around for longer than at least has been messaged, which I would think will be very positively taken by UBS shareholders.
OK, well, there we have it. There's the share price reaction, a little bit of a drift higher through the morning, but not a huge amount of reaction actually to those lines coming through. But I think this is for the AGM, so we'll see if there's more commentary comes through on that particular front. Tom, thank you very much for the analysis of the US banking landscape and a little bit of reflection on the UBS story as well. Now, US stocks are holding firm near all-time highs after a rally powered by optimism around a potential peace deal in the Middle East. Joining us now to reflect on where we are on this market story, Greg Fleming, President and CEO of Rockefeller Capital Management, a regular guest on this programme. Greg, really nice to speak to you. Thanks for joining us once again. So we're at an interesting time, actually, for markets, because, as you pointed out to me in the break a moment ago, the S&P has recouped its losses from the period of the war. Incidentally, so have some of the markets over in Asia. Europe has yet to do that. It seems as if markets are trying to move past this narrative and go back to other narratives. Do you think that's wise? Is that premature, or is that about right?
Well, it's a complicated time, and I'd say a few things in response to this. Number one, coming into the year, we were coming off of 3 years of strong equity returns, over 50% over 3 years. That hasn't happened very much in history, and typically the fourth year has more challenges. You're later in the cycle. You're later in the credit cycle. So coming into the year, we knew there would be more volatility. So you add on to that, the second thing I'd say here is an oil shock, which has obvious implications for inflation, but it also has implications for demand, particularly in parts of the world. You just mentioned Asia. There are certainly economies there that are really going to struggle if this holds in there longer. But the third point I'd make, which I think is the countervailing point, particularly in the American markets, but maybe more broadly, is AI, which remains a major theme, and for good reason, because the speed with which the technology is being deployed and the breadth of companies that are now either directly or working in partnership with some of the big providers like Anthropic and OpenAI to implement the tools and begin to show productivity improvements is quite high.
Yes.
So I think, when you piece all of those things together, there's a lot of uncertainty. Nobody, in fact, really knows where it's going to go because of the interplay of the different parts of this. But it's not as clear-cut as people might have thought when the war started, that you're going to have an oil shock, markets will be down, and down for an extended period of time. That's clearly not the way the market's reacting.
And I wonder, Greg, so are you finding space then in conversations with clients to talk about AI? Are clients wanting to discuss this as a theme that they really want to get back to investing behind?
100%. Now, remember, our clients are high net worth and ultra high net worth, so we have long-term plans in place with them. They typically stick with these plans even through times like what we're dealing with now. We're not looking to make major shifts with them. Our private advisors work with them on these plans, and they stick to them. You might make pivots and adjustments based upon what happens in markets, but clients are pretty steady in our client base. But they are very focused on AI. They're very focused on AI in many ways. From an investment standpoint, there's obviously shifts there. I mean, you look at what's happened in the software industry over the last 12 or 18 months, and that was significant and rapid. What are other industries that are going to be affected by AI in a way that you need to think about investments there, from an investment standpoint, but also industries that are going to be able to create a lot more productivity. And then our clients are focused on AI and how we're implementing it at Rockefeller Capital Management. How are we going to use the tools to make our interface with them more efficient and better for the client?
Okay. You mentioned there that high net worth individuals is the focus, and they make adjustments based on the news flow, but broadly they follow the plans. I mean, I wonder if for some clients, depending on their geography, whether the events in the Middle East have been a time for a big rethink about where the money is and in how many locations and in what currency and all of those associated conversations. What do those conversations look like? Well,
for most of our clients are American clients, and I think for them, not major pivots, but it does highlight the need for a diversified strategy and a long-term strategy. So I think that that just reminds people that it is a volatile world. That things that people think aren't going to happen or shouldn't happen do happen. So I think that does affect investors in the United States, but around the world clearly. I mean, there are many companies, a lot of them in Asia, that were performing quite well. That the shock from oil prices creates an immediate issue there. So that highlights the fact that things can change quickly, and it comes back to the long-term plan and the diversification.
Yes, and I wonder how much the thinking around private credit is evolving. So in those long-term plans that those high net worth individuals have, I mean, we've seen some high net worth individuals wanting to get reduced exposure to private credit as a result of some things that have happened, and software and AI threats to software is part of that conversation, of course. How is that evolving, the private credit narrative?
Well, more broadly, alternatives in private markets is such a big slice of the investing pie. $20 trillion of assets in not just private credit, but infrastructure, private equity across the landscape. And our clients, because they're high net worth and ultra high net worth, they can withstand the illiquidity of those investments. So our clients are still broadly invested across alternatives and across private markets, including in private credit. When we look at private credit from most of the major players there, and from what we see, there isn't something fundamental and secular. Clearly, there are industries that are being impacted by AI that affect the private credit business. And one of the things that the private credit providers need to focus on is software changed quickly. Literally in 12 to 24 months, it went from an industry that everybody wanted to lend to an industry where there's dramatic change. What are the industries that AI is going to affect from here that the private credit providers need to focus on ahead of the game so that they're diversified against that possible change, which again could be quite quick. Yeah. But for our clients, we keep them invested in alternatives. They have exposure in private credit. We're careful with the different firms that we work with. We don't see something fundamental in the space. The other thing, Anna, I would say is, we are later in the credit cycle, and private credit, as you know, grew out of the credit crisis, which you and I were part of, when the banks, because of regulation, pulled back, and the private credit providers really were born during that time. And, those investments clients are into smaller companies. The returns on those funds are typically higher yield with higher defaults. Defaults have been very low over recent years. We're later in the cycle. So some of what's happening there was, again, inevitably going to happen as the cycle went on. Software reinforced that, driven by AI. There will be other industries that AI impacts that the private credit providers need to be aware of. But for us, it's still an asset class that we're comfortable with clients being exposed to with the right providers.
Okay. And so when you explain to clients, or maybe they see it for themselves, around gating and around, do high net worth clients, do they see gating in private credit and private markets more broadly, and the lack of transparency that's maybe attached relatively to those kind of products, do they see that as a feature and a positive, actually, because it protects their investments from sort of panic fire sales, or do they see it as a negative to try and overcome?
I think they mostly see it for what it is, the positive to protect against fire sales. We're quite clear with our clients when they go into a fund with a potential gate that the gate's there. There's some history in this. As you know, Blackstone with BREIT had a gate several years ago, so there are a lot of clients in the wealth space that saw that gate and saw what happened from there. So I think the sophisticated clients, the high net worth and ultra high net worth, they're aware of it. They don't react, immediately in a negative fashion. They watch the returns from there that the providers are providing. They watch how the firm is responding to the environment. There's not a sense of the gate goes up and there's panic. We don't see that with our clients, and I don't think you typically see that across the broader high net worth and ultra high net worth spectrum. I will say that I think broader retail, maybe mass affluent, will be more cautious on some of these alternative products like private credit going forward because of all the media attention. There is no interview that anybody like me does now. Not that you hit a lot of topics, not just the ones that are out there, but this is a topic that everybody wants to talk to on a recurring basis.
Yes, absolutely. It is newsworthy. Greg, thank you very much.
Great to see you
so much for joining us. Greg Fleming, President and CEO of Rockefeller Capital Management. Coming up on the program, ASML faces a major blow in China as new U.S. legislation threatens to block sales in its top market. How resilient are the forecasts that we've got from this business this morning on that front? We'll get more details. This is Bloomberg. This is The Pulse. I'm Anna Edwards, live in London. Now, Europe's most valuable company, that is, of course, ASML, has raised its full-year sales forecast after a surge in global AI spending. Bloomberg's Charlotte Hughes-Morgan joins us now from Amsterdam with some details. Charlotte, good morning to you. So what do these results then tell us about the state of AI rollout? Because they matter for this business, but they also matter more broadly for the markets.
Yes, thanks, Hannah. I mean, as you mentioned, we saw ASML up its full-year forecast and now expects between 36 billion euros this year to 40 billion euros. I mean, this is really the continuation of a story we've been seeing since the start of this year and even before. AI demand continues to boom. You've got ASML management actually saying, the demand for AI chips continues to outstrip supply. ASML saying, its customers are ramping up capacity. You've got TSMC, ASML's largest customer, Samsung, SK Hynix. So, these companies across the AI ecosystem in memory chips, in logic chips, they're all pouring money into ramping up their assembly capacity. And ASML says, it's working with customers to make sure that it can also meet this demand. But the bottom line is, this AI infrastructure spending, this AI demand just continues at pace, and ASML is saying that we're well positioned this year and beyond to capitalize off that.
Yes, a really positive commentary around demand for chips more broadly, wasn't there, from ASML today, Charlotte? But what about the Chinese dimension here? The company's largest market last year was China, but of course there are restrictions and talk always of restrictions and what they can do in China. So what's the latest there?
Yeah, this is a really important story for ASML, and we saw net system sales to China fall to around 19% of ASML's total system sales. I mean, that's down from 36% last quarter, and this is something that ASML had guided for. They said you'd see this stabilization, this drop-off in sales to China. And as you mentioned, ASML is actually already under significant export restrictions to the country. It's never been able to sell its most advanced chip machines, so the the systems it sells are a few generations older. And then, of course, we saw recently in the US draft legislation put forward to further tighten those export restrictions to China. And that would, obviously it's in its early stages, but that would potentially curtail ASML's revenue from China, which is still a significant market for the company, despite the kind of drop-off we've seen this quarter.
Charlotte, thank you very much. Thanks for the analysis. Bloomberg's Charlotte Hughes-Morgan joining us there from Amsterdam. Let's go from Amsterdam to markets or companies listed in Paris. Hermès plunging this morning as sales missed analyst estimates. The Birkin bag maker has been hit by the disruption caused by the conflict in the Middle East. For more, we're joined by Bloomberg opinion columnist Andrea Felsted with thoughts on Hermès and beyond. Good morning to you, Andrea. So what are your takeaways then from Hermès in a Birkin bag or any style you like?
I think this has fed into a broader concern about Hermès. The shares have really, fallen around 25% over the past year. They've really derated. They're on a forward earnings of about 33 times. Their 5-year average is 48 times. You can see how much they've fallen back because there's a real worry is other designer labels we've had this incredible reset of designers, lots of new creative directors. Hermès is still doing the same as it did. We've seen the resale values of the Birkin and Kelly bags actually moderate from the peak in 2022. That's sort of in line with the luxury boom and bust and in line with the values of Rolex and other, highly traded, coveted assets. So there's questions about is Hermès really as immune
as
and really untouchable, exactly as we thought, and this has fed into that really.
Because and maybe that's the backstory in people's minds going into these numbers today. Then, because you mentioned this a couple of days ago, there could finally be some competition.
Exactly.
Where do we look for that?
Well, where we look for it is Chanel, and obviously they're not listed, so it's quite difficult. But we've seen all the pictures of people, the frenzy for the bags. Dior, LVMH just said Dior was selling well. They're probably the two places, and that are the competition.
OK, and then let's talk about Kering, because there the focus is on Gucci, and I think the share price reaction, in fact, it's still negative, down by 8.8% over at Kering. I mean, this is under new design control, right?
Exactly.
The Gucci brand, and yet we're not seeing it deliver just yet.
Exactly. There's two things. They had the new CEO, Luca de Maio, in September, and the shares had an incredible run. Investors thought he's going to, come in and transform Kering. He's done a lot of the early obvious things to do, renegotiating the Valentino deal, real estate deals, selling the beauty business. So I think investors got a bit ahead of themselves. Then we had all the frenzy over Demna, and he was going to turn it around. I was always very sceptical. I think he's the wrong designer. Clearly, they said they're selling well, good reception, but there hasn't been the frenzy over Demna from consumers that there has been over Chanel. There's not the buzz. So I think it's going to be quite tricky with Gucci still to turn things around.
Still difficult to turn things around. And, I mean, are you surprised at how negative the share price reaction is, Andrea, given we kind of saw the Middle East drama coming for these businesses?
Yes, I thought actually LVMH was pretty solid. LVMH was, yes, it was disrupted. Fashion and leather goods wasn't great, but, China going in the right direction, the US going in the right direction. US still good for Hermes, but perhaps China not as strong as for the others, because Hermes was quite resilient in the downturn, so it might not have as much of a bounce, but still it feeds into these broader worries about the brand.
OK, Andrea, thank you very much. Bloomberg opinion columnist Andrea Felsted. Coming up on the programme then, let me tell you about some of the interviews that you can catch here on Bloomberg TV. Francie Lacroix will be speaking with Megan Green from the Bank of England's Monetary Policy Committee. You can catch that interview at 3:15 p.m. London time. Of course, big gathering of all of these central banking professionals over in Washington. Also later today, we'll be speaking to the Bundesbank president and ECB Governing Council member, that is Joachim Nagel, about the ECB's outlook. You can catch that interview at 4:30 p.m. London time. Up next, it'll be Bloomberg Brief. This is Bloomberg.